Passive income sounds like freedom, money showing up while you sleep. But what if I told you most people who chase it actually become more stressed, more dependent, and further from real wealth? The truth is, passive income isn't passive at all. And misunderstanding this can quietly cost you years. If you've ever dreamed about escaping the 9-to-5, this video will change how you see money forever. And if you want deeper insights, real strategies, and even more uncomfortable money truths, join our Telegram channel, link in the description. Let me start with something that nobody says out loud. Passive income doesn't make you free, it makes you responsible. And most people are not ready for that responsibility. Because when you hear passive income, your brain imagines something very specific. You imagine waking up, checking your phone, and seeing money deposited into your account. No boss, no schedule, no stress, just freedom. But here's the part nobody tells you. That money didn't appear out of nowhere. It came from a system, and that system either needs your time, your capital, your risk, or all three. There is no version of passive income where you give nothing and get something. Think about that. Let's take the simplest example, dividends from stocks. Sounds passive, right? You invest $50,000 and maybe you earn $2,000 to $3,000 a year in dividends. Money while you sleep. Except nobody talks about how long it took to get that $50,000. For most people, that's years of saving, discipline, saying no to things, delaying gratification. And then, once you have it invested, the market drops 20%. Now your passive income doesn't feel passive anymore. It feels stressful, because now you're watching your account go down. You're questioning your decisions. You're wondering if you should sell. This is the hidden layer. Passive income still requires emotional control, and most people underestimate that part completely. Let me tell you about two people, Daniel and Chris. Daniel is obsessed with passive income, watches YouTube videos, reads about real estate, wants to escape the rat race. He jumps into everything fast, buys a rental property with minimal research, starts a side hustle, tries dividend stocks, crypto, affiliate marketing, all at once. Chris does something much more boring. He focuses on one thing, building capital. He works his job, saves aggressively, invests in index funds, doesn't talk about passive income, doesn't chase it. 5 years later, Daniel has 3 income streams and constant stress. Tenants calling, side business not stable, investments fluctuating, nothing feels secure. Chris, he has 1 income stream, but also $120,000 invested. And here's where it gets interesting. Chris can now generate passive income whenever he wants. Daniel is trapped managing the systems he built. Chris is free because he built assets first. Daniel is busy because he chased income first. This is the first truth nobody tells you. Passive income is not step 1, it's step 3. Step 1 is income. Step 2 is capital. Step 3 is passive income. If you skip step 2, everything becomes fragile. And this is where most people fail, because they're not chasing freedom. They're chasing the feeling of freedom. There's a difference. Real freedom is quiet. It's numbers in an account. It's optionality. It's the ability to say no. Fake freedom is loud. It's screenshots. It's multiple income streams. It's constant activity that looks impressive but feels exhausting. And the internet rewards the second one. That's why you see people talking about making $500 a month from 5 different sources. Sounds good, until you realize they're managing 5 different systems to earn what one decent job already pays. Let's break that down. If you make $500 a month from 5 sources, that's $2,500 total. Now ask yourself, how much time does it take to maintain those 5 streams? Answer honestly. Emails, customer support, updates, monitoring. Fixing problems. It's not passive, it's fragmented work. And fragmented work is exhausting in a way most people don't expect. Because your brain never fully switches off. You're always thinking about something. Now, compare that to someone who earns $5,000 from one source and invests consistently. Less noise, less stress, more focus. This is the paradox. Chasing passive income too early often creates more work, not less. And there's another layer to this. Passive income amplifies whatever financial habits you already have. If you're bad with money, passive income won't fix that. It will make it worse, because now you have irregular cash flow. Some months are higher, some lower. And without discipline, you start spending based on your best months. not your average. This is how people making $10,000 one month feel broke the next. Unpredictable income requires stronger systems, not weaker ones. But nobody tells you that. They just show you the highlight, the Stripe screenshots, the Airbnb payouts, the dividend notifications. They don't show you the spreadsheets, the bad months, the uncertainty, the decisions behind it. And this creates a dangerous illusion. You start thinking passive income is easier than it actually is, so you rush into it. And rushing is expensive. Let's take real estate. Everyone says it's the ultimate passive income. Buy a property, rent it out, collect cash flow. Sounds simple. But what they don't show you is this: vacancies, repairs, tenants who don't pay, unexpected costs. One broken roof can wipe out a year of passive income. One bad tenant can turn your asset into a liability. And suddenly, your passive income becomes active problem solving. Again, not passive, managed. And this is the pattern you start to see everywhere. Passive income is not about avoiding work. It's about choosing which work you do: upfront work, system building work, capital building work, then maintenance work, but never zero work. Never. And once you understand this, something shifts. You stop asking, "How do I make passive income?" And you start asking, "What system am I willing to build and maintain?" That's the real question, because every income stream has a cost. Not just money, attention, energy, time. And the people who win with passive income aren't the ones chasing the easiest path. They're the ones who choose a system that fits their personality. Someone who hates dealing with people shouldn't be in rental properties. Someone who hates uncertainty shouldn't rely on freelance income. Someone who lacks patience shouldn't expect investing to feel comfortable. This is where most advice fails. It treats passive income like a universal solution. It's not. It's a tool. And like any tool, it works differently depending on who's using it. So before you chase passive income, you need to understand something simple. You're not building income streams. You're building systems. And systems either give you leverage or they own you. That's the difference. And most people don't realize which one they've built until it's too late. And here's where things get even more uncomfortable. Most passive income ideas don't fail because they're bad ideas. They fail because people underestimate the timeline. Everyone wants passive income to work fast, 6 months, maybe a year, something that proves it's working. But real passive income operates on a completely different clock. Think in years, sometimes decades. And if that sounds slow, that's exactly why most people never get there, because they quit right before it starts working. Let me show you what that looks like in real life. There's a guy I know, Alex. Smart guy, ambitious. He decided he was going to build passive income through content. YouTube, blogs, affiliate links, the whole thing. First 3 months? Nothing. Literally $0. Month 6? Maybe $40. Month 9? Around $120. At that point, most people would quit. It doesn't feel like it's working. It feels like a waste of time. But Alex kept going. Not because he was motivated, but because he understood something most people don't. Early effort in passive income compounds invisibly. By year 2, something changed. His content started ranking. Videos picked up traction. Old work started producing new income. Suddenly, he wasn't making $100 a month. He was making $2,000. And here's the key part. He wasn't working 20 times harder. He was benefiting from work he had already done. That's what passive income actually is. It's delayed leverage. But you only get that leverage if you survive the invisible phase. Most people don't. They expect visible results too early. And when they don't see them, they assume it's not working. So they quit, switch strategies, start something new, and reset the clock to 0, over and over again. It's like planting seeds, digging them up after 2 weeks and wondering why nothing is growing. The problem isn't the strategy, it's the impatience. And this connects to something deeper, how your brain processes effort versus reward. Your brain is wired to prefer immediate feedback. You do something, you get a result. That's how jobs work. You go to work, you get paid in 2 weeks. Clear, predictable. Passive income breaks that pattern. You can work for months with no visible reward, and that creates psychological tension. You start questioning everything. Am I wasting time? Is this the wrong strategy? Should I do something else? This is why people jump from one passive income idea to another. Dropshipping, crypto, real estate, content. Back to something else. Not because all of them are bad, but because none of them had enough time to work, and every reset costs you momentum. The people who succeed usually don't have better ideas. They just stick with one long enough for compounding to kick in. Now, let's talk about something even more important: scale. Because passive income is not powerful at small numbers, and this is where expectations completely break reality. Let's say you build something that generates $200 a month. Sounds good, feels like progress, but $200 a month doesn't change your life. It doesn't replace your job. It doesn't give you freedom. It's nice, but it's not transformative. And here's the trap: getting to $200 feels almost as hard as getting to $2,000. But most people stop at $200 because it feels like proof. They celebrate too early. They slow down. They shift focus. And they never scale. But passive income only becomes meaningful when it reaches a certain threshold. Think $1,000, $3,000, $5,000 per month. That's when it starts changing decisions. That's when you can say no to things. That's when it becomes real freedom. But getting there requires a different mindset. Not just building something once, but doubling down, expanding, improving, reinforcing the system. This is why capital matters so much, because capital accelerates scale. If you have $1,000 invested, your returns are small. If you have $100,000 invested, the same percentage return creates a completely different outcome. Same system, different scale. And this is where a lot of people get it backwards. They try to build passive income instead of building capital. But capital is what makes passive income powerful. Without it, everything feels slow. Let's take investing as an example. If you invest $10,000 and earn 10% per year, that's $1,000. Helpful, but not life-changing. If you invest $200,000, that same 10% becomes $20,000 per year. Now we're talking. Same strategy, completely different impact. And this is why boring strategies often outperform exciting ones, because they scale better. They're predictable, repeatable. You don't need to reinvent the wheel. You just need more fuel. But here's the part nobody likes hearing. Building that fuel is not exciting. It's consistent saving. It's delayed gratification. It's saying no to things that feel good now so you can have options later. And that's not what gets clicks online. What gets clicks is the idea that you can skip that part, that you can jump straight into passive income and bypass the grind. But reality doesn't work like that. There's always a front-loaded cost. Time, money, effort. You pay it up front or you pay it later. And paying it later is always more expensive. Now let's talk about risk, because passive income is often marketed as safe, stable, predictable. But in reality, many passive income streams carry hidden risk. Rental properties depend on tenants. Dividend stocks depend on company performance. Online businesses depend on platforms and algorithms. Nothing is guaranteed. And when your income depends on these systems, volatility becomes part of your life. This is where diversification comes in, not just in investments, but in income streams. But here's the nuance. Diversification works best after you've built something stable, not before. If you try to diversify too early, you spread your attention too thin. Everything suffers. Instead of one strong income stream, you end up with 5 weak ones. It's like trying to grow 5 plants with limited water. None of them thrive. But once one plant is strong, you can use it to support others. That's the sequence. Focus first, then expand. And this brings us back to the idea of control. Because passive income is often sold as something that gives you control over your life. But in reality, it shifts where that control comes from. Instead of a boss, you now depend on systems, markets, platforms, tenants, customers, and each of those comes with its own rules. So the real goal is not to eliminate dependence. It's to choose your dependencies wisely. A stable index fund is a different dependency than a volatile side hustle. A diversified portfolio is different than one rental property. A system you understand is different than one you copied from someone else. And the more you understand your system, the more control you actually have. This is why knowledge matters, not surface-level knowledge, real understanding. Because when things go wrong, and they will, the people who succeed are not the ones who never face problems. They're the ones who know how to respond. And this is the final piece most people miss. Passive income is not about escaping work. It's about changing the nature of your work. From reactive to proactive, from trading time to building systems, from short-term effort to long-term leverage. But that shift requires patience, clarity, and a willingness to do things that don't feel rewarding in the moment. Because the reward comes later, much later, and when it finally shows up, it doesn't feel like luck. It feels like something you built, quietly, consistently, over time. And that's the part nobody tells you. Not because it's a secret, but because it's not exciting enough to sell. And yet, it's the only version that actually works. There's another layer to this that almost nobody talks about. And once you see it, you can't unsee it. Passive income changes how you relate to time. Not in the way you expect, but in a much more subtle, almost uncomfortable way. When you work a normal job, your time has a clear price. 1 hour equals a certain amount of money. It's simple. You can measure it. You can feel it. But when you start building passive income, that relationship breaks. Suddenly, you can spend 3 hours working on something that makes $0 and another 3 hours working on something that makes money for years. And your brain hates that because your brain wants fairness. It wants effort to match reward. But passive income doesn't work like that. It's extremely unfair in the short term and extremely rewarding in the long term. And most people can't tolerate that imbalance. Let me give you an example. Imagine you spend 50 hours building something. A website, a digital product, a rental setup, whatever. After all that time, you make $100. That's $2 per hour. It feels ridiculous. It feels like a mistake. But what you don't see yet is that those same 50 hours might produce $10,000 over the next 2 years. The problem is, you don't get that feedback immediately. So your brain labels it as low value. And that's where most people walk away. They don't quit because it's not working. They quit because it doesn't feel like it's working. That's a very important distinction. Now think about this in reverse. There are people working jobs where they earn $30 an hour. It feels productive. It feels stable. But that $30 disappears the moment they stop working. No leverage, no continuation, just a direct trade of time for money. So you have two paths. One feels productive immediately, but doesn't scale. The other feels unproductive at first, but compounds. And the uncomfortable truth is that building wealth often feels like you're doing the wrong thing, right until it starts working. That's the psychological gap you have to cross, and very few people do. Now let's go deeper, because there's a hidden cost to passive income that almost nobody prepares for: decision-making. When you rely on a salary, a lot of decisions are made for you. You know how much money is coming in. You know when it's coming. You can plan around it. But when your income becomes more passive, it also becomes more variable. Some months are higher, some are lower, some are unpredictable. And that forces you to make more financial decisions. Do I reinvest this? Do I spend it? Do I hold cash? Do I expand? Do I pull back? And every decision carries consequences. This is why people with passive income often feel more mentally loaded, not less. Because now you're not just earning money, you're managing a system. And managing a system requires thinking, constantly. Let me give you a simple example. Let's say you have a rental property generating $500 a month in profit. Sounds great. But then the HVAC system breaks. $4,000 repair. That's 8 months of income gone instantly. Now you're making a decision. Do I fix it immediately? Do I delay? Do I raise rent? Do I sell the property? Passive income just turned into active problem solving again. And this doesn't mean it's bad, it just means it's real. Now compare that to someone with a stable salary. They don't think about HVAC systems. They don't think about tenants. They don't think about reinvestment strategies every month. They trade control for simplicity. And passive income does the opposite. It gives you more control, but also more responsibility. That trade-off is rarely discussed, but it's always there. And if you're not prepared for it, it can feel overwhelming. Now here's something even more interesting. Passive income exposes your relationship with uncertainty. Some people handle it well, others don't. And you don't really know which one you are until you experience it. Because it's easy to say, I want freedom. It's harder to live with variability, to wake up one month and earn less than expected, to not have guarantees, to rely on systems that can change. Platforms update algorithms, markets shift, tenants leave, things break, and suddenly your passive income requires attention again. This is why some people actually go back to traditional jobs after building passive income. Not because they failed, but because they preferred certainty. That's not weakness, that's preference. And understanding your own preference is critical, because the worst thing you can do is build a life that looks good on paper, but feels stressful in reality. Now let's talk about another illusion. The idea that passive income is always better than active income. It's not. It depends on the quality of the income. A high-paying, stable job with growth potential can outperform weak passive income streams for years, especially in the beginning, because strong active income allows you to build capital faster, and capital is what fuels better passive income later. This is something most people completely ignore. They try to escape their job too early, instead of using it. Your job is not the enemy. It's a tool. It's the thing funding your future systems, and the smarter move is not to run away from it, but to extract as much value as possible from it while you build something else on the side. Because quitting too early forces your passive income to perform before it's ready, and that pressure can break the system. Think about that. If your rent depends on your passive income, every fluctuation becomes stressful. But if your passive income is extra, you can let it grow. You can experiment. You can make mistakes. Without panic, that changes everything. Now here's a concept that ties all of this together. Optionality. Real wealth is not about passive income. It's about options. The option to work or not. The option to take a break. The option to say no. Passive income is just one way to create those options. But it's not the only way. And sometimes it's not even the best way in the short term. Because the fastest way to build options is often through focused, high-income active work combined with disciplined investing, not scattered passive income experiments. But again, that's not what people want to hear, because it's less exciting, it's slower, it requires consistency, but it works. And this is where everything starts to click. Passive income is not a shortcut. It's a multiplier. It multiplies what you already have. If you have capital, it grows it. If you have discipline, it rewards it. If you have patience, it compounds it. But if you don't have those things, it exposes that too. And that's why two people can follow the same strategy and get completely different results. It's not just about the system, it's about the person running it. Let's go back to Daniel and Chris for a second, because their paths start to diverge even more over time. Daniel keeps adding more income streams, more complexity, more moving parts. At some point, he realizes he's not building freedom. He's building a machine that constantly needs his attention. Chris does something different. He keeps things simple, invests consistently, lets compounding do the heavy lifting. And after a while, something interesting happens. Chris doesn't need many income streams, because one well-built system is enough. That's another truth nobody tells you. You don't need 10 income streams. You need 1 or 2 that actually scale, that you understand, that you can maintain without burning out. Because complexity is the hidden tax on passive income. The more moving parts you have, the more things can break, and the more attention you need to manage it. Simplicity, on the other hand, compounds. It's easier to manage, easier to scale, easier to sustain over decades, and wealth is a long-term game, not a 12-month experiment. So if there's one shift that changes everything, it's this. Stop chasing passive income as a goal. Start building systems that can eventually become passive. There's a difference. One is reactive, the other is strategic. One is driven by emotion, the other by structure. And once you start thinking this way, you stop looking for shortcuts. Because you realize something simple. The easy way everyone is selling usually leads to more work, not less. And the boring way nobody talks about quietly builds the kind of life people actually want. Not overnight, but over time. And when you finally reach that point, when income shows up without constant effort, it doesn't feel magical. It feels logical, like something that was always going to happen, because of the choices you made earlier. That's the real version of passive income. Not instant, not effortless, but earned. And once you understand that, you stop chasing it. And you start building it properly. And at some point, if you stay in the game long enough, something very quiet happens. Nothing dramatic. No big breakthrough moment. No overnight success. Just a shift you almost don't notice at first. The systems you built start working without you pushing them every day. Not perfectly, not magically, but consistently enough that you feel it. It's the first time you check your account and realize the money didn't come from something you did this week. It came from something you did months ago, maybe even years ago. And for a second, it doesn't feel real, because your brain is still wired to expect effort equals reward. But now, the reward is slightly disconnected from your current effort. That's the moment people imagine when they think about passive income. But what they don't see is everything that came before it. The months where nothing happened, the doubts, the second guessing, the quiet consistency when nobody was watching. That's what created this moment. And here's the part that really matters. Once you reach this stage, the game changes again. Because now the question is no longer, how do I build passive income? It becomes, how do I protect it? This is where a lot of people make their biggest mistakes. They finally get some traction, and then they get careless. They start spending more. They take bigger risks. They assume the income will always be there. But passive income is not permanent by default. It has to be maintained, protected, reinforced. Let me give you a simple example. Imagine someone builds a portfolio that generates $2,000 a month. That's real progress. That's meaningful. But then they increase their lifestyle to match it. New apartment, better car, more expenses. Now that $2,000 is no longer freedom, it's obligation. And the moment something drops, they feel pressure again. This is how people recreate the same trap they tried to escape, just with different numbers. So the real goal is not just building passive income, it's keeping your lifestyle below it. That gap, that difference between what you earn and what you need, that's where freedom lives. Not in the income itself, but in the margin. Think about that. Two people can both make $5,000 a month passively. One spends $4,800, the other spends $2,500. Same income, completely different lives. One is still dependent, the other has options. And this is where discipline comes back into the picture, because passive income doesn't remove the need for discipline. It actually makes it more important, because now the stakes are higher. Now you're managing something that took years to build, and small mistakes can undo progress faster than you expect. Let's talk about another shift that happens at this stage. Your focus moves from building to optimizing. Instead of chasing new income streams, you start improving existing ones. You reduce inefficiencies, you simplify systems, you remove unnecessary complexity. Because now you understand something most beginners don't. More is not always better. Better is better. One strong, optimized system is often more powerful than 5 scattered ones. And this is where Chris really pulls ahead. While Daniel keeps adding more, chasing more, trying to expand, Chris starts refining. He reduces fees in his investments. He automates contributions. He simplifies his portfolio. He focuses on tax efficiency, small changes. But over time, they compound. And here's the interesting part. None of this looks impressive from the outside. There's no flashy growth, no dramatic jumps, just steady, controlled progress. But internally, everything feels different. Less stress, more clarity, more control. That's what real wealth feels like, not excitement, stability. Now let's talk about something deeper, because at this stage, passive income stops being just about money. It becomes about identity. Who are you when you're not forced to work? That's a question most people never ask, because they've always had structure, a job, a schedule, external pressure. But when passive income starts covering your needs, that pressure disappears. And suddenly, you have to decide how to use your time. And that's harder than it sounds, because freedom without direction can feel empty. You wake up without urgency, without deadlines, without someone telling you what to do. And at first, it feels amazing. Then, it feels strange. Because humans are not designed to do nothing. We're designed to build, create, solve problems. So the people who handle passive income well are not the ones who stop working. They're the ones who choose what to work on. That's the difference. They shift from obligation to intention. And that's where passive income actually delivers its real value, not in removing work, but in giving you control over it. Now here's something most people don't expect. Even when you reach financial independence, you still think about money, just differently. You're not worried about survival anymore. You're thinking about allocation, efficiency, long-term sustainability. Because the game never really ends, it just evolves. And this is why the mindset matters more than the strategy. Because strategies change, markets change, opportunities change. But mindset, that's what determines how you adapt. Let's go back one last time. Daniel and Chris. After several years, their situations are very different. Daniel has experience. He's learned a lot. But he's also tired. Too many systems, too many moving parts. He's constantly managing, adjusting, reacting. Chris? His life looks simple, maybe even boring. But his systems are stable. His income is predictable. His decisions are intentional. And most importantly, he has space. Space to think, space to choose, space to live. That's the outcome most people are actually chasing. Not passive income itself, but what it gives them. And here's the final truth. Passive income is not about making money while you sleep. It's about building something that works without your constant attention. There's a difference, because while you sleep sounds effortless, but without constant attention still requires design, structure, maintenance, awareness. It's not magic, it's engineering, financial engineering. And once you understand that, you stop looking for shortcuts. Because you realize something simple. The people who win are not the ones who found a secret. They're the ones who stayed consistent long enough to let the system work. That's it. No hidden hack, no overnight success, just time, leverage, and discipline. And if you take anything from this, let it be this. Don't chase passive income. Build the foundation that makes it inevitable. Because when it finally shows up, it won't feel like luck. It will feel like a result. Something you built, step by step, choice by choice, over time. And that's the kind of wealth that actually lasts.